Let's bring on Mr. Girish Kousgi, the MD and CEO at PNB Housing Finance, to talk to us about their business. Hi, Girish. Good to be speaking with you. I was just going through some of the recent headlines, and that tells me that you've actually increased the fixed deposit rate for some select tenures and select products, which is now over 8% now. Just taking a corollary from that, does it mean that cost of funds are likely to increase and, NIMs will be under pressure because of the entire tight liquidity that we are seeing in the system?
Good morning. No, I think we will not have much of an impact because of increase in FD rates for certain segment. Because today, if you look at cost of funds by instrument, I think cost of deposit is on the lower side because even today there is a differential compared to us and some of the other NBFCs.
Is that level? Could you guide us in terms of what's the expectation of cost of funds and NIMs going forward specifically?
So I think we should put things into context. If you look at last 5 to 6 quarters, we've been through a transformational journey. That is in two parts. I think the first part was to raise capital to work on the corporate book, both on the book rundown. Since we are not doing business now, it was a conscious call to run down the book. So we ran down the book from almost about 18,000 crores to about 2,200 crores. And asset quality on the corporate book has improved significantly. Today, the NPA is less than 3% with just one account left on the corporate side. Even on the retail side, for example, last March, if you see the retail GNPA was about 5.5%. And today, as we speak, the overall NPA is 1.7%. So, we raised capital, we worked on the corporate book, we worked on asset quality, and we are now preparing for to be ready in future. So all this is part one. Now coming to part two, I think we need to do a bit of work on growth and also to improve margins. So today our margin is around 3.5, 3.6. We'll be able to sustain that for next few quarters, and then it should look to improve. Now what we have done is we last year we got into affordable. We have built a book of about 1,300 crores, and we see a lot of traction in that. We have 15 months back, we were at 100 branches. As we speak today, we are at 240 branches. By March, we'll be at 300 branches. So out of 300 branches, 200 branches will be focusing on high yield business. Out of 200, 160 will be affordable, what we call as Roshni, and the next 50 odd branches will be focusing on high yield business, and the balance 90 branches will be focusing on the prime business. So the whole effort now is under phase two is to ensure that we grow. Since market is good, real estate is doing well, affordability has increased, interest rates have almost peaked, and we see that in next 2 quarters time rate will start dropping. So now this is the time for us to leap on to phase two and grow the book faster and also to improve margins.
Leap into the phase two, and growth is going to be the focus area. But just coming back to the point that you were mentioning about the running down of the corporate book, you mentioned one of the accounts was left, right? The NPA which was there in the system. When do you expect the resolution on that, and what could be the write back?
We are expecting resolution of that account in this quarter or maybe in April. I think that is the plan because the resolution is underway. It's a very small account, therefore the NPA is just about 2.8 on the corporate side. So the write back is going to be very little in terms of what we have provided.
I wanted to also touch upon then your affordable housing verticals loan book that surpassed that 1,000 crore mark. Going down the line, what is the outlook then? Do you think that this will be achievable? Can we expect the growth rate to continue to sustain at this clip going forward?
I think overall at an enterprise level on retail, we'll be able to grow at about 17% on book, and disbursement should be about 24 odd percent. And on affordable, I think this year the contribution to incremental business will be around 10%. This 10% should go to 20% in the coming year.
So for when it comes to your disbursements, just wanted to understand, I know you're talking about healthy growth, but there have been some internal as well as external challenges this time around. Have they been completely resolved now?
I think we should look at, see if you look at last 4 years, last 3 quarters have been the highest. If you look at the book growth on a quarterly basis was on an average about 1,000 crores a year back. So now we have progressed to book addition, incremental book addition of 1,500 crores. So if we look at last few months, last few quarters, the journey towards growth has been really good. 1 year back, the growth on retail used to be negative or zero. Now we have reached to a stage of 13.5%. We might end up between 14 to 15 this year, and next year on retail, the growth is going to be 17%.
Right. Sir, what we also want to know in terms of overall, when you look at in terms of your strategy, could you throw some light in terms of your strategy, especially for the emerging market strategy in the tier 2, tier 3 cities? And what geographies are you currently looking at and targeting in terms of how do you plan on increasing the penetrations in this area as well?
So I talked about 300 branches by March. We basically focus on 3 segments out of 4 segments. The first segment is super prime. So we are literally not there. This is where a lot of big banks and HFCs focus. The next segment is prime. So that is where we are present. So our 90 branches will be focusing on this segment where the yields are going to be about 70 to 80 bips from the super prime yield level. And the next 50 branches for us, it's called emerging market. So this is where we focus to take our yields at least 40 bips higher than our prime yield. And of course, we'll have 160 branches on the affordable, both formal and informal. So I think this is where our yields are going to be 12.5% and upwards starting from coming year.
All right. Thank you for joining in and giving us those growth targets, as well as assuring us that as of now, things seem to be looking pretty robust. So that's the view coming in from PNB Housing. Retail book expect to be 17 to 18%, disbursement growth at about 24%, PNB Housing at about 757. Tell you what, we'll slip into a very quick break. We've got lots of